Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, we're going to bring in Andy Swan. He's a co-founder at Likefolio. Welcome back to the show, Andy.
Thank you for having me.
All right, so we're talking more retail. We covered Dollar Tree yesterday with Landon. Stock was initially down. Wasn't a good earnings report by any means out of that discount retailer, but Five Below has done pretty well so far this year, still in positive territory. What kind of data do you guys have out of Likefolio on this one?
Yeah, there's a lot we can learn from Dollar Tree, and I think one of the biggest things we can learn is, how much it matters how high the bar is set. I was really happy to hear you guys talking about that in the last segment, because I've never seen an earnings season where, where the bar is set has mattered so much as to whether we get over it or not in terms of investor expectations versus reality. And so for Five Below, I think the bar is set pretty high, unlike Dollar Tree. The stock's up a little bit over the last year. But we do think that Five Below has at least a chance of getting over that high bar. We've got 4% year-over-year growth in web visits, which is a really important part of the Five Below strategy, is getting people to buy online. And so we're seeing some traction there. But mostly we see a very happy and loyal consumer base for Five Below. 79% positive rating, kind of blows away the rest of the competition. And, when we look at Dollar Tree's report, they really said that the higher income segment is where they were seeing the most success. And we think that's right where Five Below tends to target. And so, overall, I think the bar is pretty high for Five Below, but we think they just might sneak over it.
Andy, I am so impressed with this company. Doesn't mean I think the stock's going up, but I'm very impressed with the way they run this company and how lean and how quickly each new store, and they're growing quickly, but how quickly each new store gets to profitability and gets over that expense of opening the store. But, Andy, they do have problems with expenses, cost of goods getting to their stores, and retail theft. They lowered their net income from 297 to 319 million to 295, 311. So they eased them back, and the stock sold off based on that when they did that. Now, the stock is all but recovered, but like exactly the opposite of Dollar Tree yesterday, this stock has run a long way. It's overbought on the RSI, and it's got a high bar, right?
Yeah, there definitely is a high bar. And, that's been the one thing this earnings season that, quite frankly, has tripped us up a little bit in our trading, is not paying enough attention to how high or low the bar is for these companies, especially retailers coming into this season. I think it's a little different than other earnings seasons in the past. And so it does give me some serious notes of caution when I think about trading a stock like this into an earnings event, because our data is good on Five Below. We think that they're going to report good numbers, unlike what we saw out of Dollar Tree. But is it going to be good enough? And I can't say for sure. Obviously, we don't have a crystal ball, but we do think that long term the company's in a very good position versus competitors, which is is always a good spot to be. And we think that this is a nice niche to be in. So overall, we like the company. We like the way the executives execute on their plan. But for this report, it's a tough bar, and we'll have to see. I think I'd be pretty cautious, maybe give some room for a flat trade to still make me money. You guys are very good at figuring out how to do that.
Yeah, just over the last couple months since we hit those 52-week lows, the stock's gone up $45. So it's had that rally. But Andy, when you guys look at this, we got some of the Cyber Monday, some of the Black Friday retail data that's been coming out. What are you guys tracking overall in the retail space where, hey, maybe this rally in Five Below is justified at this point? Or are we too optimistic that, hey, maybe we topped out as far as retail sales data, and then it's going to start to come down? Because we've got, a good, 5 weeks until Christmas between those two dates, Black Friday and Christmas.
Yeah, what we saw out of the Black Friday weekend in terms of consumer demand, consumer enthusiasm to go out there and spend was really strong, surprisingly strong, stronger than I expected it to be. That that applies to these dollar discount stores like Five Below. We do think that they'll have reason to be optimistic about the rest of the holiday season on their conference call. It's going to be more about what they say about 2024, I think, because I think they have every reason to think this is going to be a pretty good holiday season.
Yeah, and just last quarter, the stock sold off because they lowered guidance moving forward.
Yes.
So we'll continue to watch that. Great stuff. Great data, as always, Andy. Appreciate it.
Thank you.
All right, that's Andy Swan, co-founder at Likefolio, breaking down the data for us.